Welcome back. Today we're going to dive into the market madness. We're going to look at recent trade setups, we're going to look at the market sentiment, and we're going to plan what the next few days looks like. But the current price of Bitcoin sits at an impressive 51,367, which is quite nice. Bitcoin seems to be on the rise up. Now, over the last 24 hours, we've had quite a nice rally up. We're looking at around 6 to 7% to get us up to that price. So what's the market mood? Are we soaring up all the way to the all-time highs? Or is the bull cycle here? Is it time to stack your bags of Bitcoin and altcoins, or should you wait for a retracement? We're going to talk about that, later today. All right, like I always say, in trading, one of the most important things you need to do is to plan your trade. You have to plan your trades and trade your plan. So that's exactly what we're going to do. We're not gambling anymore. We've got the tools and we're going to use that to read price action accurately. So let's start things off by looking at our current trade. So as of our last stream, we were on this line here. We were saying that if we look at the market structure, we had a range over here that developed. We had a breakdown of the range, and at about here I posted an idea and I said this was just a thought. So we went up, we broke out of said range, we went down. Okay, and I said, well, we're probably going to get a bounce here. Now, why did I say we're going to get a bounce there? We're going to talk about that. And then I said we're probably going to come up here and go for a further downward continuation. Now, did we get that? We're going to talk about that in a second. So why did I enter this trade? So I actually entered the trade at this low over here. Now, the reason I entered this trade is because, well, it's simply a retest of our old demand range. Like I said, we talked about ranges yesterday, and ranges occur over 70% of the times when you're trading Bitcoin. So it was simply a test of our old range. So here we have it. This is our old range. We broke out of that range and we simply came back for a retest. If we drag that down, we've simply come back for a retest to get the juice in order to go further up. That's what's happened. And we can see that clearly on the 1 hour. On the 1 hour, we've had an old range. We've broken out with these strong bull trend bars, really nice strong bars. And you can see these bars, they're filled all the way to the top, which is a sign that this is a strong breakup. Now, due to this strong breakup, could say it wouldn't really make sense to have this strong breakup and just, dissipate all the way down. So we've, retraced for some more energy to go further up. And that's exactly what's happened. So how did I enter this trade? Remember, I say to enter any trade, you have to look for market structure to change. What do I mean by market structure to change? I mean, market structure has to go from printing lower lows and lower highs to higher lows and higher highs. Okay, so we have to get something that looks like this. So we're going printing lower lows and lower highs to higher lows and higher highs. Okay, this is what we call a market structure change. Where does that change occur? It occurs exactly at this point here. And that point is what we say is a break of structure. All right. So let's take a look at this trade here and let's see exactly how I entered. The reasons I entered, right? We had an old range. Okay. Another thing we had at that region is it was a decent fib level. Okay. I don't always use fibs, but it is an added tool for confluence. It was a decent fib level. So if we take our fib from the low to the high, we're seeing that we bounce almost exactly at that 786 level. Okay, right? So those just gave me an idea that, okay, this is an interesting area to look for a trade, right? I was actually hoping to get a retest of this range to write it down, but instead I entered this trade over here. How did I enter this trade? Let's take a look. If we go all the way down to the 12 or the 15 minute, let's use the bar replay tool. We can see that as we break out of our range, or break down from our range, price marks down. Okay, let's slow that down. Let's take it about 3 bars per sec. Price marks down, and what does price do? Price prints that first bottom. Okay, now that first bottom is obviously inside our old range. Okay, now a lot of people would have seen this and said, right, price has printed out a bottom, time to enter a long, let's go. I would never, ever, ever recommend that. Never get into a trade, when you're seeing a sharp rally down, on that first entry. Look, we've got these bear bars, really strong bear bars. It's a very risky trade to get in there. What do we have to look out for? We have to look out for a second entry. A second entry is a higher probability entry. Usually, price will print a low, it will rally up, and then it will try to retest that low to test whether the bears are really in control. And if the bears are not in control and the bulls are in control, that's when you're going to get that higher probability setup. Okay, remember, we're always looking for setups with high predicted probability, and the second entry is 9 times out of 10 better than the first entry. The first entry it's just gambling in my opinion. So let's see what happens. So if we go further down, we can see price has printed that first bottom. It's come up, it's set a little mini range over here, range low, range high, and then in the middle, it's set a little range over here. And at this point, what am I looking out for? When I'm looking at this low, to see whether we're going to get a retest of that low. Now, if we get a retest of that low with a market structure change, with bullish divergence and market cipher, then we're good to go. All right, so let's see what happens. So price rallies down. It's about to come into our region. It comes into our region, and something very, very important happens. It doesn't close. It simply wicks that region, okay? And what can we see on market cipher? We can see that as our price rallies down, we've printed another low, our momentum waves are rallying up, okay? You can't quite see it here. Let me see if we can move this up for you. You can't quite see it, but anyways, you've got this momentum wave. The blue wave is a momentum wave. You can see that it's rallying up. That's what we call a bullish divergence, okay? And it's an indicator that there is a turning point. But, we still don't have a change in market structure yet, do we? All right, and let's see, if we go on a 5 minute, do we have a change in market structure? Let's see. So if we draw out our structure on a 5 minute, we've got a low, we've got a high, okay? So before we get a change in market structure, that high must be taken out. So we're going to draw a line there, and we're going to carry on to see, okay, then we form another low. All right, now that validates that high. So that means that if this high gets taken out, then we're good to go. So we're going to play this, and we approach that level, and as you see, we get a reaction off that level. Now that reaction, it's a bit it's a tricky one, because a lot of people might be thinking, okay, this is a wick, we're going to rotate down again for that range. But it was simply a trap. It was a trap for the people looking to short there, because we print 1 bar, 2 bars, they're both inside bars, and then shortly after, this happens. Okay, so we actually break that level. So this is the indication that we're looking to enter that long there, and you would usually look to enter that long on the retest of that break. So let it go up, it comes, good. So we've got that retest, so you'd probably be looking to enter that long right about there, okay? But I actually entered off of market structure, so I entered slightly earlier. And that trade is around, I'd say about 250% in profit at the moment. Okay, and I've moved that stop loss to entry, so I've completely de-risked that trade, and I am playing with house money. That's how I like to trade. All right, so let's see what's happened as we continue. Well, we said we were looking to play the retracement. Okay, we're looking to play this retracement, and let's see, did it occur? To play this retracement, guys, what do we need? We need market structure to change bearish. We said we're looking for that reconfirmation. Does that reconfirmation occur? Well, let's take a look. Well, we can see we've formed our range. We have our range, high, range, low, we've passed the middle, okay? And then we're looking to see, are we gonna break bearish? Where are we gonna break bearish? We're looking to take out this low. If we do not take out this low, we do not have a change in market structure bearish. So let's see, could we have entered this trade? Well, look, we wicked that low. Again, another trap. We wicked that low, but we didn't close below that low. What does a wick mean? It means a potential rotation all the way back up, to the top of the range. So that's exactly what we got here. We wicked that low, and then we rotated to the top of that range. So let's play that out, and let's see. So could we have entered that trade? No, that was a no trade. Okay, so no trade over there. So we're going to get rid of that now. And that's just what, that's the trade I'm currently in, and that's the only trade I'm in. And it's done quite well, actually. And, it's rallied all the way up. And we are where we are at the moment. Okay, so what does the market look like? Let's take a close and personal look, at the charts and see, where are we headed? And, as far as price action, what's our plan over the next few days? Well, first things first, let's go to the higher time frame. You have to notice that, hey, listen, we've been in a massive tear up. We've been going up all the way since, February 1st, 2020. That looks more like, 1st of Jan 23. So we've been going up, all right? But this is still a bearish structure on the monthly. Why? Because we broke structure bearish here. We're looking for that retracement leg. Where will that retracement leg take place? We're not quite sure. But before that retracement takes place, we expect a bearish change in structure on the weekly, a bearish change in structure on the daily, and a bearish change in structure on the 4 hour. But what happened? On the 4 hour, we had that bearish change in structure. We thought, oh yes, this is it. Well, this is the turning point. But no, it was quickly substituted by a bullish, change in structure. And we are in that bullish trend at the moment. That's exactly what we see. And look on the 4 hour, or this is the daily actually. Look at these bull bars. Strong bars filled all the way to the top. Strong bar filled. Strong bar. These are very bullish bars. And it's not stopping. We trapped a few traders here and we continued up, so it's not stopping. So, it seems like we are rallying up, but where are we going to get that turning point? Well, to get that turning point, you have to look at, do we have any supply and demand zones, in our price action above us? Well, earlier we had these zones, the 45-minute, the 1 hour zones. We did not get a reaction off of them. We tore straight through them, so we can get rid of them. Okay, what do we have above us now? Well, we have this 8 hour zone. This 8 hour zone was from, obviously, when we started to mark down from the previous bull cycle. We can see that clearly. We had a bull cycle high, okay, and we had this 8 hour zone that was generated here. We also have a zone above that, a 12 hour zone that we're going to look at in a second. Okay, so these are my two next areas for potential shorts. And you have to see that this zone is confluent, okay, with our fib level. If we draw a fib from the all-time high to the low, we can see that we have a zone, our supply zones are, in between that fib level, that fib zone, between the golden ratio and the 786. So that's where I'm looking for my next trade. So, I'm looking for change in market structure at those levels. It looks like we are blasting through this 8 hour supply at the moment. It looks like we're blasting straight through it. So, we have to think, is Bitcoin going to continue this tear up? Or is it going to take a break? Is it going to take a chill pill? And is it going to turn and reverse around? Let's get rid of this so we've got, clear charts. Now let's talk about what the next trades look like for me in the short term. Well, like I said, we've got this, we seem to be blasting through this 8 hour supply, So I'm going to park the bus on this for now, okay? Until I see something convincing. What do I mean by something convincing? Until I see something that looks like this. We rally up within it. Maybe we range here for a bit. If we break downwards, perhaps retest and then mark down. I will look to enter on that retest. Until I see that, I'm not touching a trade. Okay, above us we have this 30-minute supply. Like I said, with this 30-minute supply, be cautious because this 30-minute supply, it has slightly lower predicted probability value compared to our 8 hour supply and the 12 hour supply above us. Now, why is that? That's the case because that supply, if we look at the 30-minute and we zoom out, okay, that 30-minute is around here. If we go to if we go to the left, that 30-minute supply is, we can't really see it. Well, we've got a daily. That 30-minute supply is bang in the middle of, lots of inefficient price action over here. Fair value gap. Remember what I said a few streams ago? If we go down, easy up. We have lots of inefficiencies over here. So just be careful that price doesn't blast through all the way up as it blasted on the way down, okay? So that's what we have. Be careful with the 30-minute supply. And above us, we have this 12-hour supply. This 12-hour supply looks to be the juicier one. It looks to be the one that's also confluent with our 786 level. So definitely look there for your shorts. Now, as for your longs, what are you looking out for? On a local time frame, on a local perspective, for our longs, well, let's see what Bitcoin has been doing. What has Bitcoin been doing? What has it been doing? So, what has it done? Look, we go further down. Okay, we've had, I'd say we've had a range here. We've had a range, yeah. We've broken out of our range. We've come into another range, you know. We've broken out of that range, okay. We've retested, okay. And it seems like now we have also broken out of this range. So obviously my next trade, my next long trade is going to be a potential retest of this range. So I'm going to extend this over here. There's going to be a retest of this range. I'm looking for price to do something like this. If it marks down, you know, if it marks down in this direction, bear with 1 second. If it marks down and then shoots up, you know, and carries on that move, I'm looking for a long trade at the top of this range. Okay, so if I pop that there, looking for a long trade at the top of that range. That will be my next long trade. So that's what I'm looking out for now. Okay, now to get a more specific entry, I'm going to tidy up this chart briefly. Tidy this up just so it's clear. Now to get a more specific entry, you might want to check, are there any zones within that level? Well, the big move up, you know, was derived from this tiny accumulation we had here. So that's a level to look out for. And that's tiny accumulation we've had there. So look out for that bounce off that level. And also, why don't we see what the volume profile looks like? So if we take our volume profile of this range before the break happens, well, that volume profile, we've got a value area high coming out around there. So I think this region in general, from the range high, you know, to that value area high is a pretty decent place to look for a trade, okay? If you're looking for a long trade, but be careful. Remember what I always say, easy up, easy go. Look how easy it was to go up there. Just as easily, it could come back down. Again, when it does come back down, it will come back down aggressively. So make sure you're looking for clear market structure change as it marks down, all right? So that's what it looks like. In terms of our short trades, we're looking at this, you know, 30-minute supply, but, you know, we're a little bit hesitant because we know it's not as strong of a supply. But we're also looking at this 1 hour supply, 12-hour supply, all right? Below us, in the immediate short term, we're looking at a retest of that range. Okay, so we're looking for a retest of that range. So where am I going to set my alerts? Alert number 1 will be below that supply. Add alert over there. And alert number 2. Where are we? Yeah, that's below the 30-minute supply. Where is this 12-hour supply? It's disappeared. Oh, that's because I didn't drag it across. If I drag that across, alert number 2 will be just around there. Okay, so that is what I am looking out for. And as far as my long trades, I'm looking for a long trade just above our old demand range. Okay, all right, that's what I'm looking out for. Now, on a very local time frame, you could perhaps treat this as a range where we're currently at over here. We could treat this as a range. What do I mean? Well, we've got a range high, we've got a range low, we've passed through the middle, and we're going to look at price action to see whether we get a change in structure as we approach this range high. All right, so maybe we go on a 2-minute. Do we have a change in market structure? Well, at the moment, we don't have a change in market structure. At the moment, we seem to be rallying up. So if we draw out the structure from this low, it looks like this. I guess if we take that, perhaps, and we would be looking to at least break this level with a very convincing close before we enter that trade, if we're looking to short it from here. All right, so if you wanted to scalp when you're looking and you're eager to get into a trade, perhaps have a look at that, you know. But there you have it. Remember, each and every one of this level, we're looking for clear market structure change. All right, we're not entering a trade until we see this market structure change. Remember to only risk 1% of your account or less. All right, you want to be in the game long enough for you to actually learn what you need to be consistently profitable. So there you have it. That's what Bitcoin looks like. If you found this useful, don't forget to follow, and I will see you tomorrow.